Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and today we're going to be doing a brief discounted cash flow calculation on Exxon Mobil stock, ticker symbol XOM. And if you're not aware, a DCF calculation is just basically a pretty popular method that's used in the financial industries and at investment firms and stuff like that for determining the fair value of a company. And the basic strategy that's used is you project out future free cash flows that the company will provide, and then you discount those free cash flows by a discount factor, basically, and then that gives you the present value of those future free cash flows, and then you can extrapolate that out to provide the fair value of the company, and then you just divide it by the number of shares outstanding to give you the fair value per share. So I actually did two different calculations for Exxon Mobil and we got pretty drastically different results. So I wanted to share both of them and kind of show how they're both not really perfect. So this first one, these rows right here, or columns, sorry, are basically the future free cash flows that I'm projecting Exxon Mobil to produce in the next few years. And then this is a terminal value, which is sort of the sum of all free cash flows beyond that fourth year. And then these right here are basically discount factors that are based on this required rate of return that we want. So we're basically saying we want ExxonMobil to return us 7% a year. So these discount factors are going to discount those future cash flows to some present value, which is listed right here. And then we basically add up all those present values of the future cash flows, and then that gives us today's value, which is right here, which says around $169 billion. And there's around 4.2 million shares outstanding, and that gives us a fair value of around $40 per share. And then we probably want to apply a small margin of safety to that fair value. So with a 10% margin of safety, then the fair value is around $36 per share. And just for reference, the current price is $55 per share. So by this calculation, ExxonMobil is pretty overvalued at the moment. But there's definitely some nuance here that we should take into consideration and just consider, I guess, when deciding how accurate this might be. So the basic method I used to determine the future free cash flows was by using analyst estimates, basically, for revenues. So these two values right here are analyst estimates for the next 2 years of revenues. And then I also compiled the last 4 years of revenues, and then I basically found the average growth rate of those revenues and the projected revenues, and that was 4.88%. So then I grew this revenue by another 4.88% twice to get these final two revenues. And then I also looked at the income in the past, and then determined the average profit margin from that income, and then I applied that same profit margin to the future incomes. And then I used past free cash flows and calculated the free cash flow to net income ratio in the past, and I applied a 40% free cash flow to net income ratio for the future free cash flows, and that's basically how we determined the future free cash flows based off of the net income. So there's a few factors to consider here, and one of them is basically the coronavirus pandemic. Obviously, it really hurt their revenues this year, and then it obviously really hurt their net income, and as they had a negative net income this year. So that kind of messed up some of the numbers, messed up the free cash flow to net income number a little bit in this year, I think. But the lowest number in the past few years for that was around 40%. So that's the one I went with. So there's just some little problems here with this calculation that are just sort of out of our control. So that's why I said just take it with a grain of salt. And that's sort of why I did the other calculation as well, which I'll show you now. So for this calculation, basically what I did is instead of finding analyst estimates of revenue and then calculating the free cash flow from that, I just basically found analyst estimates of the free cash flow itself, and then plopped these in there for the next 3 years, and then calculated the terminal value for that based off those analyst estimates as well. So this method is a little bit different, and the one thing I will say is these free cash flow numbers seem pretty high in my opinion, just based on the past few years, what they've produced. I mean, they've produced around $16 to $18 billion in past years, but it's just been kind of all over the place sometimes, and so I'm not sure how consistent they can be in the future. So that's definitely one thing to keep in mind. So We found these analyst estimates basically, then we discounted them like before, just like before, and then we added up the total value and divided by the shares outstanding to give us a fair value per share of $90. And then with that margin of safety of 10%, that gives a buy price of around $81, which is significantly higher than the current price of $55. So by this calculation here, it looks like Exxon Mobil is pretty undervalued at the moment. So personally, I think the fair value of Exxon Mobil is probably somewhere in between those two estimates. I would probably say it's around the current price maybe, or probably a little bit higher than the current price at the moment. So for me, I'm not going to be adding my position anytime soon, just because I have a pretty good average cost, and it's a good size in my portfolio for what I want. I really don't want oil to be a big chunk of my portfolio, but it does pay a very nice dividend. I think I have almost a 10% yield on cost, which is just crazy for that dividend. So the dividend is nice, and I have a nice average cost, so I'm definitely holding on for now. And if we see some big drop, I'll probably be adding to that at that point. So I recently actually did a short stock analysis on Exxon Mobil stock. So if you're interested in checking out that video, I'll leave a link right up here, and I'll also leave a link in the description below if you want to check that out. So I appreciate you guys watching the whole video to the end. I hope it was helpful and gave some insight into what we're looking at with Exxon Mobil and what the fair value might be. So with that, I will see you guys in the next one.